Welcome for today's webinar about private pension plans. Let me present myself. My name is Patrick Malje. I'm one of the founders of TaxX, TaxX.lu, which is the website in Luxembourg to do your tax return online. So on the bottom left of your screen, you can see a QR code that you can scan, and there you have access to a calendar where you can schedule an appointment. So we can call you. This takes 10 to 15 minutes, and during that call, we will go through the different options you have to optimize your tax situation and can tell you exactly what makes sense in your personal situation. So today we are talking about a special kind of deduction on your tax return that allows you to save taxes on your revenues. Basically, the taxes you save are based on the amount you are earning. So basically, your taxable income. We will come to that in a few seconds. So the amount of taxes you can save by deducting a certain expense on your tax return depends on your salary, so or on your income. So let's take an example. If you are a single and if you're earning approximately 3,000 euros grossly per month, your tax savings would be approximately 26%. If you are earning 5,000 euros gross salary per month, you will be at 42% of tax gains. And if you're earning, for example, 10K a month gross salary, your tax savings will be approximately 43%. This means basically that if you deduct 1,000 euros on your tax return, then your tax savings will be 430 euros. So you have different possibilities of tax optimization in Luxembourg. Last Friday, we had a webinar about all the different possibilities. So basically there we explained what you can do. You can watch that webinar in a replay on YouTube, Facebook, or LinkedIn. Basically, we talked about interest expenses you have on loans. We talked about insurance premiums, private pension plans, contributions to home savings plans, and cost of childcare and domestic help, and extraordinary expenses. Don't hesitate to watch those videos online. So today we are talking more about the private pension plans. Next Friday, there's another webinar planned where we'll talk about the possibilities to protect your family and to save on taxes thanks to different insurance products. And November 18th, we will talk about the advantages of home saving plans. So on the tax return, they are talking about épargne prévoyance vs, which basically is a private pension plan. So what's the goal of a private pension plan? But basically it's to build up capital to enjoy it later at the time of your pension. And right now you already have advantages because you can enjoy tax savings already today. So why should you think about your pension already now? Because basically the public pension system in Luxembourg and in a lot of other countries, it's quite uncertain that it will be at the same level than today. So basically the governments are giving incentives to prepare also alternatives regarding pensions. So in Luxembourg, we count three pillars of pension insurance. We have the public pension system. That one is automatically. Your employer is taking basically 8% of your salary each month to invest in the public pension system. You have the supplementary pension scheme, which basically it's a pension plan put in place by your employer. It's called RCP. You can find it on your salary slip if your employer is offering that type of pension plan. If not, and if you think they could be interested in it, they can get in touch with me, and we can have a talk about the different options for their company. And there's another possibility of a pension scheme, that's the RCPI, which basically it's a pension plan for independence. Third pillar, it's a private pension plan. So basically the one we are talking about today, it's also called the 111 bis. So what are the criteria to deduct the private pension plan? But there are a few. Basically, the most important is the ceiling. So there's a maximum deductible limit on your tax return, which is 3,200 euros per person, which will not be increased if there are children in your household. So it's 3,200 for you. And if you have a partner, it's 3,200 for your partner. So you could deduct a total of 6,400 euros on the tax return. However, it's important to note that it's the 3,200, it's your personal limit. So you cannot subscribe a pension plan for 6,400 for you and not deduct the entire amount on your tax return. So basically, it's a personal maximum ceiling of 3,200 for you and 3,200 for your partner. In terms of duration, there are two criteria. First one, the contract has to run for at least 10 years, and the maturity is at earliest at the age of 60, and at latest at the age of 75. So, for example, if you subscribe at the age of 55, then the 10 years rules is important, because the contract will be at maturity at the age of 65. So at the age of 65, you can access the money you invested into that plan. If you subscribe at the age of 30, at that moment, the earliest you can access that capital is at the age of 60. And you could even subscribe to a pension plan at the age of 64, even if you are already in pension. And there also the 10 years rule is applied, so you can access the capital at earliest at the age of 74. So at maturity of the contract, you have two options. So basically, you can have the entire capital paid in full at once as a lump sum, or you can ask to get a monthly life annuity. So each month you will get a certain amount. Or you can also decide to have a mix of both. So you can, for example, have half of the capital in your contract as a lump sum, and the other half will be paid monthly for a defined duration. There's also taxation at maturity. So basically, if you get the money at maturity, it will be taxed. But if, for example, you are opting for the monthly annuity, then already 50% of that annuity will be tax exempted. You don't pay taxes on that one. And if you are opting for the lump sum, so the payment in full at once, at that moment, it will be taxed at half of average tax rate. So basically, a few examples. If you are living in a couple with a taxable income of 100K, then it will be taxed at more or less 9%. If you have a taxable income of 150K, it will be taxed more or less at 12%, and at 200K, it will be taxed approximately at 14%. So what are the options you have? But basically at Lalux, you have two options for the private pension plan. You have the option security and the option performance. The security option gives you the guarantee that you will have a certain capital at the end of the contract. So basically, every amount you are investing into that contract, you will get it out, for example, at the age of 60. There's a minimum interest rate, which currently, unfortunately, it's 0%. Also have the possibility to get an additional profit participation rate that may be set annually based on the insurance company's results. So mainly the advantage of that option is the security you have, because you know exactly what you will get out of the contract at maturity. The performance option, there your money will be invested in investment funds, and you have the choice between different funds. For example, you can opt for a fund where 100% of the money is invested in stocks. You can opt for a fund with only 75% invested in stocks and 25% in bonds, for example, 50%, 25%, and there's also a fund investing on the monetary market. There, the performance, of course, depends on the evolution of the stock market. There's no guaranteed capital, but because normally a pension plan is running for a very long time, the return on invest will be higher than with the option security. So how much will you get out of the contract at the end of the contract? So basically a few examples. Here with an investment of 266 per month, which is the maximum you can deduct on the tax return, and with different average return on invest. So basically, one example is 5% return on invest each year, 3% and 1%. Over the last 20 years, the average return on invest is between 3 and 5%. For example, for the fund investing 100% in stocks. So, for example, if you are investing 266 euros per month for 30 years, then with a 5% return on invest, you will get at the end of the contract 212,000 euros approximately. After 20 years, it would be approximately 105K. So basically, over that time, you would have invested a total of 64,000 euros. So that's the money you are investing each month, 266 euros during 20 years. And you will get, with a 5% return on invest, 105,000 euros at the end of the contract. If you would only invest 100 euros per month, because basically the 266 per month is the maximum, but you can also invest only 100 euros per month. In that situation, after 30 years with a return on invest of 5%, you will get approximately 80K, and after 20 years, you will get approximately 40K out of the contract. So how much taxes you can save? This depends on your income. We have seen different examples. So basically, a single with a monthly gross salary of 3,000 euros, the tax savings by deducting 3,200 euros each year would be 832 euros. If you have a gross salary of 5,000 euros a month, you can save 1,334 euros in taxes each year. And with a monthly gross salary of 10K, you could save approximately 1,370 euros per year. So over the entire time of your contract, for example, if you're investing 266 euros a month for 30 years, then your total tax savings will be approximately 40K. So basically, out of the 148,000 euros you are getting at the end of the contract, the Luxembourgish government offered you kind of 40,000 euros thanks to tax savings. After 20 years of investing, the total tax savings will be approximately 27,000 euros. So at the end, for the contract, for 20 years, you would have invested 64,000 euros, but thanks to the tax savings of almost 27,000 euros, at the end, your net invest would only be 37,000 euros. But at maturity, you would get approximately 83K out of the contract. So we have seen that at maturity, you have to the capital you will getting out of the contract is taxed. So for the monthly life annuity, you exempted 50%, and the other 50% are added to your normal income. And if you decide to get all the money out of the contract by lump sum, at that point it's taxed at half of average tax rate. And to give you an idea, if, for example, you are a couple with taxable income of 100K, at that moment it will be taxed at approximately 9%, with 150K at 12%, and with 200K at 14%. So let's go back to our example, 266 euros invested per month over 30 years. So at the end of the contract, you will get approximately 150K out of the contract, and a single with a taxable income of 50,000 euros has to pay 13,000 euros in taxes. So as a recap, a 30-year contract, 266 euros invested per month, a single with a taxable income of 50K. So in total, he would have invested 96,000 euros into that pension plan. The total tax savings would be approximately 40K. So at the end, his total net invest would be 56,000 euros. he would get a lump sum of approximately 148 euros. So depending, of course, on the return on invest of the fund investment, he has to pay 13,000 euros in taxes on that lump sum. So his net capital gain would be almost 80,000 euros over the 30 years of contract. And the same for a person with taxable income of 500K at the age of 60. So his tax at maturity is the only thing that would change because of his higher income, he would have to pay more taxes. But still, his net capital gain would be approximately 62K euros over the 30 years of investment. So as for every investment, there are fees. So at Lalux, for the pension plan, there are only entry fees of 4.5%. There are no management fees and no exit fees. Other insurance companies in Luxembourg, they also ask management fees, which can make a huge difference over the lifetime of the contract because lifetime is quite long. And at the end of the contract, there's a lot of money invested. And at that moment, at Lalux, which is only asking entry fees, you pay a lot less fees than at other insurance companies here in Luxembourg. And that's also something good to know for expats. And we will come to that in a few minutes. So yes, you can modify your monthly payments. Basically, you can increase them. Imagine you are starting a contract with 100 euros a month. You can increase it up to 266 later on. You can also decrease it, or you can even suspend it. So you can stop your monthly payments. So a lot of experts asking me if a pension plan makes sense because basically they are not sure if they stay here in Luxembourg for the next 20, for next 30 years. It still makes sense because right now you could save on taxes thanks to your investment. And if you would leave Luxembourg one day, at that moment you can stop your monthly investments without any fee. What you cannot do is access the money that you already invested because basically you got that tax gains to prepare for retirement. So the money you already invested will stay invested. You will get a return on invest based on the stock market evolution. And at the age of 60, wherever you are living at that moment in the world, at that moment you can access your capital that has been invested here in Luxembourg up to that moment. So yes, it makes absolutely sense for expats to subscribe a pension plan here in Luxembourg. Another question that is asked very often: am I not too young to start to think about my pension? Definitely not. So basically, the earlier you start, the more you can have at the age of 60. So for example, if right now you're only 30 years old, you can start with a lower amount per month. You could start, let's say, with 100 euros a month, but already those 100 euros will increase your capital that you can get out of the contract at the age of 60. And if later on you want to increase your monthly investment, that's perfectly possible too. So who benefits from a capital in case of premature death? So if you would die before the age of 60, basically the money goes to the beneficiary, so in case of death. So you decide who that will be at the moment when you subscribe to contract. Could be your kids, could be your spouse, could be a member of the family or friend. So you are free to choose. You can also later on change that beneficiary. If, for example, right now you don't have kids, but in a few years you have kids, you can change the beneficiary in your contract. So at the moment of your death, the beneficiary will have access to the funds. So a private pension plan is not only to prepare your future, but it's also a very good tool to cover or to protect your family for the worst case scenario, because you can set up a capital that will be accessed by your family members in case of your death. So how to subscribe to a pension plan? Basically, there are a few questions that you have to ask yourself. The first one, how much should I invest each month? You can start at 50 euros. You can invest 100 euros, 150, 200, up to what 266 a month. So you are free to decide what amount you want to invest each month, and you can change that amount also later on. Second question, what option should I choose? So there you have the option performance or security. So basically that's a question you have to ask yourself. If you are more interested in the security of having a certain amount at the age of 60, or if you want to go and invest your money on the stock market in the funds we just discussed. At what date should start the contract? So basically even now in November, we can start the contract then on January 1st, 2022. At that time, you would have to pay the first 11 months of this year at once, and starting from December, it will be monthly payments. Why should you do this? But basically, this allows you to already deduct the maximum deductible limit on your tax return for 2023. So you already can get full tax gains in 2022. And last question you have to ask yourself is who will be the beneficiary in case of death? So basically, will it be my kids, my partner, my family, or whoever you want to assign? So TaxX can help you with the contract. Basically, we can have discussion. Just book a call. We can go through your situation. We can discuss the best options for you. Afterwards, we can prepare the contract proposal for you that you can sign online. So you don't need to get to see someone. We can set up everything for you. Why subscribe to a private pension plan now? Because basically it's never too late or never too early, sorry, to prepare your future. Right now you can deduct up to 3,200 euros on your tax return and reduce your taxes up to 1,438 euros. And as discussed, you can also protect, thanks to the pension plan, your loved ones by building up savings that they will get if you would die before the end of the contract. Do you want to know how much tax you can save in your situation? There you have different possibilities. Easiest one would be to do your tax return on taxx.lu. So there, at the end of the process, when you are downloading your tax return, the system will present you different tax optimization options you have. So basically, you see exactly what deduction you can still apply on your tax return and what is exactly the amount of taxes you could save in your individual situation. That's one possibility. For those who have done their tax return in the official PDF form from tax administration, you can also upload that PDF on taxx.lu/simulator. After a few seconds, you will see an analysis of your tax optimization options. You can see exactly how much taxes you could save, and you can get in touch with our team to discuss this in a short phone call in 10-15 minutes. So don't hesitate to book an appointment so we can have a chat about your personal situation. If you have questions regarding tax optimization or your tax return in general, don't hesitate to contact our customer support team at help@taxx.lu. I hope you had an interesting webinar, and I wish you all the best for this weekend. Enjoy the rain and have a nice day. Bye-bye.